Hello everybody, so this video is entitled MSTR, time for the Bitcoin war, time to defend Bitcoin, time to protect Bitcoin, acts and facts. And I started making this video as Bitcoin was crashing to 66,600 and change or something like that. It's up $1,000 in the 50 minutes it took me to make these slides. It's up $1,000. Of course, when the market closes, the manipulation for some reason just stops. And of course, when it's 8:30 a.m. my time in Texas, the sell-off begins very, very hard when the market opens. Really, that 19% of the time the market is open in the US is really when all of the shenanigans go on. Time for BTC war. That's the title of this video. So let's go ahead and talk about it. I have many points to make after this epic crash. It's absolutely nonsensical when an hard asset like Bitcoin will lose so much value in so little time. And to me, it's clear it's all about the manipulation. My frustration is very high. First of all, let's begin with the one asset that I don't have frustration with, which is actually strategy. Actually, strategy is behaving like it should. It's down 9%. Bitcoin is down 6%. Strategy is down 1.5 times what Bitcoin is down. The problem is Bitcoin. The problem is not strategy. And as far as stretch goes, the problem is the FUD. We've had so many FUD attacks to the point that stretch actually traded before 96, below 96 today. Now, the buying pressure came back in, but I consider stretch here to be a deep value for the fixed income investor. The buyers have entirely deserted stretch. I think, at least my big hypothesis, is that a lot of people who maybe were owning stretch decided to sell stretch to buy perhaps the Bitcoin dip, to buy perhaps the strategy dip. That's the way I look at it, because if you look at the refinery analogy of Saylor, that refinery analogy is working so well on a catastrophic liquidation day for Bitcoin today. Catastrophic. Let's just call it what it is, right? Yesterday was really bad. Today was way worse than yesterday, way worse. So on a catastrophic day, you had stretch only down 1.3%, right? And you had strategy down 9% like it should. So I think a lot of people perhaps own stretch, and when they see that strategy drop so much, boom, they sell some stretch, and they either buy strategy or they buy derivatives, they buy leaps on strategy. I think the refinery is working. I think the financial engineering is working, but in times of extreme dislocation for Bitcoin, unfortunately, the peg of STRC can't really hold. And of course, this is very similar in the bond market. When you have a lot of turmoil on the rates, when you have a lot of turmoil in the bonds can also drop 1% in a day. Stretch, to me, is behaving very much like a bond, very much like a money market. We are not that far off from 100 at, let's round it up to 97. We're really not that far off from 100. So anyways, that's point number one. Point number two, manipulation, in my view, is clear as day. And I'll get to Marty Party. Marty Party is kind of a person I've grown to follow for like a year and a half now. I love his stuff. I recommend you follow him. This is his feed. I always have his feed open on one of my computer windows, and I look at it, and sometimes it's great, other times it's frustrating. But the more you look at the feed, the more you understand what's going on with the manipulation, with really the big unregulated exchanges who are trying to liquidate the coins in order to get the money from the perps, right? The perp traders, there are people who say they go 50x on Bitcoin, and if Bitcoin goes up 2%, well, they double their money, right? And so because a player like Binance and all of the other players are market makers, they can see who placed the bet, and they can just go ahead and manufacture a price that will liquidate the gamblers. And what I think is absolutely fascinating, if you look at Marty Party's chart, of course, is Hyperliquid. You know, I've made a video about Hyperliquid, about a digital asset treasury company owning Hyperliquid, unfortunately doubled in like 40 days. So that's also some inefficiency of the market, although a more telling efficiency about the issues of Bitcoin and not the issues of hype. Hype is not prone to manipulation barely. I mean barely at all. That token is barely moving. While all of the rest, Solana, Sui, ETH, BTC, the older tokens where the exchanges have a bigger stake are just moving and showing the same pattern. And Marty Barty tweeting this today, highly recommend this video, feel free to look it up, talking about the manipulation and how this manipulation works. At many exchanges, it's 3/4 of the trade. 3/4 of the trade at many exchanges are trades that are happening between bots. And Dana Love here even goes into like an example at an exchange where you had two bots who were literally selling and buying from each other at insane speeds, at insane oscillation, insane pace, just selling to each other the coins to create the fake volume, to create the fake price, to manufacture the price. Allegedly, I'm going to go ahead and say allegedly, right? But academic research is kind of the best we've got. So take that with a grain of salt. We need regulation, and these manipulations need to stop. We need something going on there. But allegedly it would be Binance who's doing something about it. To me it's clear that there's manipulation. I see manipulation, and when you see it, like opening of the trading day we crash, end of the trading day we crash, and whenever, of course, we are off market, whenever you can't really buy derivatives on any of these assets, very inaccessible. Whenever the markets are closed, whenever derivatives are closed, very inaccessible, right? So it's kind of crazy, if you ask me. That's just me. Okay, point number 3. Check your influencers. I am not a technical analyst. I am not a technical influencer. This is not what I do. I stay within my league. I like Marty Party's stuff. I like his data. I like his feed. But perhaps picking the right influencer on a day like today, perhaps picking the right influencer would be judging them on whether they were radio silent or not today. So many Bitcoin bulls, so-called, were radio silent today, as X was bleeding, as socials were bleeding, as the fear of it was in full steam. All of a sudden, you have people who are usually super bullish, radio silent. Not a single word on the crash. This is my second video today about the crash. Third video with yesterday. Some people are just radio silent. Many people were claiming, we'd be at 90 or like in the high 80s in late May. In 3 weeks we'll be in the high 80s. Where are these influencers who are radio silent today? Maybe you just narrow it down to the people who actually are not radio silent, who actually are still talking on a day like this. Maybe that's when you know who you should follow and you should not follow, because frankly, they make things worse. They make things worse. And let me tell you my take before I'm telling you what's going on with the price predictions. But my take is this: day to day, I know nothing. That's my take. I have no idea where this is headed. This could go to 50. This could go to like 80 again. This could go to 90. I have no idea, and I'm perfectly comfortable with that. I have a portfolio that is anti-fragile. I don't do perps. I don't do crazy leverage of any sort, so that I don't get wiped out if it gets to 50. I know nothing. That's what I'm telling you right now. But today would be a good time to take notes, because right now you have a lot of influencers who are all saying we're going to 50. 50 is next. 50 is next. And I've seen this so many times before with all sorts of stocks and assets. Like right now they say 50 is next. Let's assume 50 is next. What are they going to say? Then they'll say 20 is next. Let's assume 20 is next. Then we're going to say 5 is next. And then we're going to say it's going to 0. So this time of turmoil is a good time to check your influencers. Okay. Point number 4. This one targeted about Saylor. Of course, Saylor doesn't listen to me, but I think it's important to point that out. Michael Saylor, you do not have to do something that you don't want to do. Do we remember the whole no ATM below 2.5x MNAV debacle? How much higher would the stock be right now? How much higher would the stock be right now if we had been ATMing in August of last year, right? Probably much higher. But it lasted 6 weeks where they did an ATM below 2.5 MNAV thinking the MNAV would recover to that. I don't think that was Saylor's idea. Just like I'm not so sure selling the Bitcoin is Saylor's idea. He did it for tax loss harvesting, but I fundamentally believe that actions speak louder than words. And when I see at the actions 32 Bitcoin sold, are you kidding me? Like I really don't think Saylor wants to sell. And we've seen it in statements like, oh, we'll buy 20 Bitcoin for each one we sell. You remember that statement, right? Words are cheap. Actions show whether you mean it or not. Only selling 32 Bitcoin, frankly, it doesn't make a difference at all. 2.5 million raised, that doesn't make a difference, especially when he was still able to tap the ATM for more than 100 million on the MSTR ATM. So that's point number one. And then when he sold the Bitcoin, no tweet, no nothing about it, just a statement, Bitcoin is working, no tweet, no nothing. I don't think Saylor wants to sell Bitcoin. I really don't. I think maybe it's advisors, maybe it's the AI he's talking to, but I really don't think he wants to sell Bitcoin. And when you consider that selling Bitcoin brings tweets like this from not a tech titan, Jason, who conveniently tweeted himself next to Peter Thiel, he compared himself to Peter Thiel. Seriously? How could you compare yourself to Peter Thiel, Jason? Anyways, from not a tech titan, Jason, not the founder of Palantir, Jason, oh, Saylor drove Bitcoin over 100K. What do you mean? Like, I don't think he did. Do I think he had a little bit of influence? Yes. I don't think he drove it above 100K. I think the liquidation is the reason why we're so undervalued. The 1010 liquidation from the government shutdown, I think that's the reason why we're so undervalued. But now Jason is saying, oh, look, it looks like he's going to drive the Bitcoin down to 50K, making it seem like Saylor actually wants to sell, I don't know, 100,000 Bitcoin. As if he wanted to sell 100,000 Bitcoin. I believe he doesn't want to sell any Bitcoin. It's all about his advisors and who's advising him. I don't see the conviction in his desire to sell Bitcoin, and so we'll see what he does. And I think maybe he reverses that policy. But the harm done by Hodlers on Saylor only selling 32 Bitcoin, I think the harm is not worth the benefit. Like that, I don't think the tax benefit is worth the reputation hurt. But anyways, if Saylor thinks it's the best idea, then go ahead and do it. But when I look at the actions, I don't think he wants to do it. I don't think he's interested in selling the coins. I just don't. And realistically, about the rating agencies, I've said that before on my channel. But okay, so we spent the cash reserve to buy back a convert. Now we're selling Bitcoin. Do we really think the credit agencies are going to give any credit to Saylor? I mean, think about how long it took for Tesla to even get some credit from S&P Global. Like they were saying, oh, Tesla doesn't have enough variety in the cars. I don't think these are institutions. I think these institutions are too traditional. They can't be influenced like that. I think the way for crypto is not to do things thinking they please the rating agencies. I think the way to do it for crypto is to create our own rating agencies. Why don't all of the DATs get together and create their own rating agency? Maybe throw a Coinbase in there, throw a Kraken, maybe create a consortium with all of the crypto space and create your own rating agencies for all sorts of tokens, for all sorts of token-based debt, for all sorts of stuff. That's kind of what I think, because I'm not sure Moody's and S&P are going to move on this. You know, they are the establishment, and Bitcoin is disrupting them. So anyways, point number 5, stretch is useful. Stretch is useful. Why do I say that? Because if you're somebody who studied Bitcoin for thousands of hours, like many of us have, you probably have no tolerance for this dumbness. Like when you see a day like today, it really shows you that, yeah, you've studied Bitcoin so much, but there's so many uneducated players in the space that you don't even want to be associated with them. Unfortunately, you don't have to, because it's the real world. You don't have to. But most people don't tolerate stupid, and therefore, because they don't tolerate stupid, it's tough for them to even buy Bitcoin outright because the volatility cannot be explained. Like, manipulation is not a good enough explanation for the learned Bitcoiner, at least in my view. So we go and we make 1 Bitcoin equals 1 Bitcoin, and we have that trend on X. But truthfully, how could Bitcoin be down 23% in 4 weeks when this is the asset that is the most proof to disruption? The most disruption-proof asset out there from an intellectual standpoint, if you really study it, is Bitcoin. And it's down 23% in 4 weeks. Nothing has changed. Protocol has not changed. Nothing has changed. You know, why is it down? Some people try to say, oh, it's a bunch of money leaving Bitcoin to buy AI. Really? Are they really selling their Bitcoin 50% off to buy AI? Are they really doing that? I mean, I know that's the narrative. Is it a dumber narrative than that? Is it simply manipulation? So anyways, Stretch is useful. Why is Stretch useful? Because if you own Stretch, you don't have to go through 23% drawdown in 4 weeks. You can just settle for a 3% drawdown in 4 weeks. For a lot of people who want to keep their sanity, this is extremely, extremely, extremely valuable, right? And I see one of the major Stretch MSTR Futster was making the point in a video yesterday that, oh, you could recreate your own Stretch by buying government bonds and, like, say, go 50% government bonds, 50% pure Bitcoin. Well, except the government bond is not backed by Bitcoin, is it? That's the big problem. The government bond is backed by fiat. It's backed by trust in the government. It's not backed by trust in Bitcoin. So if you want to compare Stretch to a government bond, you have to ask yourself, who do you trust more? Do you trust more the people who say they want to have the platinum coin every other year? Do you trust more the platinum coin people, or do you trust more Saylor? I would argue a share of Bitcoin and a share of Stretch is a better value proposition because there's 3 times more Bitcoin backing Stretch. What are government bonds backed by? Well, they're backed by the U.S. government, which includes Congress. And what does Congress do with the budget and with the finances? Congress is always going to spend more money. It's always going to issue more bonds, and bonds are always going to lose their value. I don't think that's necessarily the truth for Stretch. I really don't. Especially if Saylor keeps working on that BTC rating ratio and wants to have a stable BTC rating ratio. Sure, if Saylor wants the BTC rating ratio to go like below 1, sure. But I think he wants to keep Stretch a high quality instrument to lower volatility. So anyways, there was no news, yet we dropped so much, and I understand people don't want to be subject to that, so I understand why people would buy Stretch. And then I will conclude with 2 final points, and these are more philosophical, but this is my fundamental. I really believe this. Bitcoin is highly, highly undervalued. People showing you the charts, Bitcoin hasn't really moved in 5 years. If you bought the top 5 years ago, if you DCA, you're fine. If you DCA, you're fine. Most people DCA, right? But if you're the unluckiest person of the past 5 years and you bought the top 5 years ago and you own Bitcoin now, you're barely up, right? You didn't make much money, if any at all. So to me, Bitcoin, the price right now, 67,000, is not the real price. To me, the real price is much higher than that. The real price is probably a few $100,000. I don't know how many thousands dollars. Is it 200? Is it 300? I don't know, but it's a few $100K. At least that's what I would sell my Bitcoin for. But of course, nobody's going to pay you that because the market believes that the price is what the brokers tell you. But of course, the price that is advertised with the brokers is a fake price because 3/4 of the volume on the brokers are just bots trading with one another. So the price is fake. This also intuitively explains why if you follow Saylor and if you follow the buys of Saylor, have you ever wondered why Saylor always pays much more than the spot price? Like, spot price is good if you buy 1 Bitcoin. But whenever you want to buy any meaningful amount, the advertised price at the brokers is not honored. So the point I'm trying to say is that it's kind of like if you know precious metals, buying gold, having physical gold is actually much more expensive than buying spot gold on an exchange. I think Bitcoin has very, very similar patterns where actually the price on the exchange is kept down compared to the actual Bitcoin. And this explains why Saylor keeps overpaying on OTC, because when he tries to go to the exchanges outside of OTC, he likely can't get the advertised price. That would be my take. And of course, don't sell your Bitcoin. No financial advice on this channel, of course, but I'm definitely not selling my Bitcoin. And, real estate is not a perfect comparison, because there's all sorts of real estate markets right now. But real estate has not moved in 5 years, right? It hasn't really done much. Same for Bitcoin. And these are two very hard assets with kind of finite characteristics. Of course, Bitcoin is way, way, way more rare than real estate. Obviously, real estate is at risk of automation and robots and all that sort of stuff. But for the time being, that hasn't happened just yet for real estate. Real estate, of course, you have to pay insane maintenance costs and tax and stuff. You don't have to do that on Bitcoin. So Bitcoin is, to me, much superior to real estate. Much, much, much superior. But nonetheless, if you look at it in a vacuum and just look at the past few years, you could argue that real estate is undervalued. Bitcoin is undervalued. Why? Because we have a very tight Fed. We haven't had much liquidity. And we haven't had much excitement. And that's why these assets have been left behind. A lot of top assets have been left behind in favor of hype, like a lot of the AI hype. And so the money circulating is essentially the same. It just moves from one pie to another pie, right? So it moves from SaaS to AI. Now it seems like maybe some of the money from Bitcoin is moving to SaaS again. But the pile of money is about to grow much, much more. That's beat the denominator. The pile of money, of course, is M2, but it's also the euro dollars, right? It's also other foreign L dollars, which are not really tracked and you can't really see. But to me, we have not seen liquidity in the system enough because we've had a stubborn Fed. We've had a stubborn Fed who hasn't dropped the rates, and so we haven't seen the liquidity. But we are going to see the mother of all liquidity coming, right? The big print, as Larry Lepard book says, the big print is coming at some point. And I think all sorts of hard assets will benefit, not just the same flow of liquidity moving from the next hot thing. And I'll conclude with this: price drives sentiment, not the other way around. And this is very clear today. Crypto fear and greed index dropping by another 4 points compared to yesterday. Why did it drop this much? Because the Bitcoin price dropped. The price precedes the sentiment, not the other way around. And it's quite unfortunate. Note that compared to not that long ago, the sentiment has been more than halved. The sentiment has been more than halved. When we were trading at $70,000 plus, what is it, like 45, 60 days ago, the sentiment was much more neutral to greedy than it is now. And we haven't dropped much in price. But the sentiment is way, way worse than the price would suggest. But the price drives the sentiment. Anyways, hopefully, at this point, I'm doing mostly this video for me to feel better because I'm very frustrated and very upset about today. Hopefully this gives you some indication as to what I think is going on. So this was Acts and Facts. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.